Attorney Weeks referred to this, and we do want to touch on the fact that there's help out there. We have a statewide network of nonprofit agencies that will help you with foreclosure counseling. They'll help you with debt management. They'll help you learn how to build your credit and what a difference that can make in your life. And all of that is free. We have information back on the table, but for those of you that are seeing this online, please call our office and we'll be happy to lead you in a direction. Our next guest speaker for the evening is Priscilla Schuyler. Priscilla is a loan officer with Prime Lending. We know at our office that if we have a client that we want to be treated well and helped with all their questions, that will make this an easy process for loans. Priscilla is going to be one of our people we can call. And we're awful happy to have her here with us tonight.
Hi, I'm Priscilla Schuyler with Prime Lending. I wanted to go over some options that are available as far as refinancing or loan modifications. The federal government has set up Making Home Affordable, and that is basically set up for loans that were guaranteed by Fannie Mae and Freddie Mac. But other loan types are considered, so that you can go on the website for Making Home Affordable and try to see if your servicer is on that list. You have to have a loan that was originated on or before January 1st, 2009, and you have to have a monthly mortgage payment that is greater than 31% of your gross income. And you have to have a payment that's not affordable due to a financial hardship, but you have to prove that. And the options under Making Home Affordable, you've got, of course, HAMP, where you could get your interest rate reduced or your loan term extended to 40 years, or they may do a principal forbearance. Not that principal amount would be forgiven, just that they would put it on the end of your loan as a balloon payment. So at the end of 25 years, then you would owe that money. Some servicers are doing principal reductions, but they are not required to do that under Making Home Affordable. So my company really doesn't handle a lot of loan modifications. We have our investors would have to, of course, approve those. But we do a lot of HARP, and HARP is where you can refinance your home. Maybe you don't have enough equity in your home, but you had a Fannie Mae or a Freddie Mac loan, and sometimes you're allowed to go up to 125% of what the value is of your home. We have a website, which is fanniemae.com and freddiemac.com, and you can go on those websites and see if your property is a Fannie Mae or Freddie Mac, because you wouldn't necessarily know because your loan, is serviced by different banks. With Fannie Mae has an automated system called DU, and DU will tell us if your property is eligible. We would look it up on the website first, but when we run it through DU may tell us that we do not need to get an appraisal for your property. So therefore, if it didn't appraise, we're still able to refinance you at a lower rate. You have to be current on your loan at the time of application in order to do the DU Refi Plus. That is one thing that they do want to see, is that you are current on your mortgage at that time. With Freddie Mac, we have to have an appraisal. My company, we only go up to 105% of the appraised value if it is a Freddie Mac loan. Some other companies out there may do 125%. And that's one thing. The government has set up these programs, but the banks can set their own guidelines as to what they will accept for these programs. Another option is an FHA Streamline. If you currently have an FHA loan, you don't have to have an appraisal. You don't have to verify your income, and you don't have to meet debt ratio requirements. If you currently have one, you can do an FHA streamline. You do have to have a job. They do verify that you're still employed and that you can make your payment, but it's a great way to lower your interest rate. The only thing with that is if you don't get the appraisal, then you have to be able to cover your closing cost on that product. So a lot of times a loan officer may work it into your interest rate. You might have a higher interest rate than you would have had if you could have paid those closing costs out of pocket. Another great product out there is if you have a VA loan, the VA IRRRL. It's called a VA interest rate reduction loan. It does not require an appraisal. It does not require employment verification or debt ratio as well. But they do verify employment, obviously. And all of these products are just for rate and term only. No cash out can be gotten on these products. So there's a lot of good products out there. And one great thing about selling your home here in Colleton County is that the USDA program is available for buyers who do not own a property, and that's 100% financing, no mortgage insurance. Those products are not available in Charleston, and very few parts of Dorchester and very few parts of Berkeley are eligible for that, but all of Colleton County is. But the trick is you can't own any other property. It has to be, basically someone who's just going to own one primary residence. So that's a great advantage here in Colleton County. If you're a seller, that product is here for a buyer to get. One thing too is if you're going to sell your house, it's very important to price your house right, to know what the value is, because if it does not appraise, we will not loan money on it. It just will not happen. And there's very, very few buyers out there. Probably 1 out of every 10 applications I take today will qualify to buy a home. So it's getting harder and harder for people to qualify. FHA just increased their mortgage insurance premium, their monthly mortgage insurance amount that a buyer would have to pay. That came out October 1st, and that makes it a little bit harder to qualify with the mortgage insurance premiums being higher on that product. They've tightened everything up on us. So, if you're looking to sell your home, you want to make sure that, you've got it looking good and that you've got it priced right, because when that buyer comes along, there's not as many of them out there that you want to make sure that you can get that house sold. At that point, we would only lend on what the house appraised for. So the seller would have to reduce their contract or release the buyer from the contract at that time. So no, your real estate agent cannot appraise your home. They can give you an idea of what the market would sustain right now, and they're very good at that, just because of all the foreclosures that are on the market. As Mark Weeks said, my house would not appraise right now. I know it wouldn't. If I wanted to sell my house, I would be upside down, just from being in the market. But your real estate agent really has a great idea of what's selling in the area, and but it would have to be appraised to really know for sure, based on the comparables. And appraisals are only good. A lender will only accept an appraisal for 90 days, usually, nowadays. So that can change, in a matter of a couple of months. Your house may be worth something different.